Hello, and in today's session, it's going to be a game of pretend. And a lot of people play pretend whether they like it or not. We have this pretend game where a person in a red suit, once a year, at the end of every year, will travel the world in about a 24-hour period, giving many different gifts to people, as well as a real life hare, a big hare, a rabbit, that comes and delivers eggs at the start of the spring. We even pretend that today's currencies contain value. We pretend that the debt issues can actually get managed by our lovely politicians. And we even pretend this new digital currency has value and will actually work. There's a lot of pretending that we do. And well, the pretending that I feel like doing is calling this the Dow, a stock market. We can even pretend that the stock market is legitimate for this particular session. That I don't know. I'm not going to pretend that. But we'll pretend this is a Dow. We got the times on the bottom of the screen, 8 o'clock going on to 1600, your intraday sessions. And well, we'll assume that the previous 4 o'clock period closed maybe somewhere around here above 11,340. And the day begins. It's 8 o'clock. The Dow futures are barely down, and they go down barely more. But then things start to change a little after 8 o'clock, and the market rallies up from 11,320 to 11,390, a 70-point push in about 20 minutes or so. That's happened before, and it will happen again. And then 9:30, the market opens, and somewhere around 9:30, the market starts to shoot towards the upside, going from about 11,390 up to about 11,490, about a 100-point push in what would be about 12 minutes. I guess each one of these candles would be between 2 and 3 minutes. So the market starts off higher, and it had a decent-sized retracement from 11,490 to 11,430. Intraday traders may drop Fibonacci from this low to this high and see that this was a 61.8%, or one of the Fibonacci's, with the second one being right at this line here. So what does this tell us? Well, it tells us that we found support where it was supposed to, came higher, and then no surprise. So the rally at the start of the day failed. All the optimistic views that we had for the time being are taken away. But as the morning it moves to the afternoon, the market moves in a boring sideways consolidation period and then starts to get going again to the point where it's back to its intraday highs. If you are away from the computer all day, you come back, you see this, you'd be telling yourself, well, boy, golly, geez, this looks like it's a failed move. It didn't find resistance and go down further at 11,450. It's probably going to continue to go higher. Question is, do I want a position before the end of the day? And if that's the case, how am I going to approach doing so? If you're buying segments, personally myself, I would be expecting this level here to be a key level that would hold, if it even goes down there, because it's already retraced just based on this final candle. After all, if we look at the Fibonacci just from this high and this low, then this little level here is the 61.8%, with another Fibonacci market here showing that it has made this move to be a failure. Now, different strategies I would use, because I personally would feel that there would be a good chance this level would hold. So this would be a great time to buy because it's not up too much based on the fact that it's already corrected about 12 points. Maybe put another entry down towards here, and then again at this level here. And then put your first stop loss here, your second stop loss here, maybe your next one down below here. If, of course, it breaks down. Now, in the Dow Jones, the stop losses would be very important. And this, as I hope 99% of you realize, this is actually the quarterly silver chart. Now, I wouldn't be putting a real stop loss in here and in here, because I'm not going to pretend that the market is random. And I'm not going to pretend that this thing could actually collapse priced in fiat currency. After all, in the Dow Jones, we can see this 16 or this one period session. I was going to say 24 hours, but it's not even 24. But a 1 day session, the inflation is going to be minuscule at best. Whereas over a 40-year period, it would be the complete opposite to be that of non-minuscule. And the tops back then in silver was $50 an ounce. Question is, how much has inflation went up since then? 5 times, 6 times, 10 times? We'll say 6 times just at a small conservative level. So 6 times 50 is 300. We'll even say that this bottom here is 10, or even this bottom is 10. So if we do 300 divided by 10, we'll get 30. And we'll put this to the power of 61.8% to give us a Fibonacci level. You take the high divided by the low, in this case it would be 30, to the power of 61.8%, and multiply this by the low. This gives us a price objective to 81 to reach 61.8 from this high to this low. If we pretend that there's inflation, we pretend it's at that variable, then that's where it would be. But as far as this being a potential stock market, I've seen this happen before where it can come back here and then boom, next thing you know it's 11,550 by the end of the day, because things pick up after 2 o'clock, which 2 o'clock here would translate to somewhere in here. So to me, this looks like what an intraday stock chart may potentially look like. But what I'm not going to do is I'm not going to pretend that these moves are actually going to be, the down moves that is, damaging for the market. And you know what? Maybe I might pretend only for it to be damaging because I know it's not. I know it does give opportunities to buy fiat currency, and I can pretend that people are not waking up. I can pretend that the currency is going to be fine and that will still remain to be slaves, but I don't choose that to be the case. Okay, thank you everybody for watching this pretend video, and have yourself a great day. Bye-bye.